2022 is the reason you are here as a rising star.
Right.
So you start the year with 17,000. We make a high on January 3rd, first day of the year.
Right.
And for the rest of that year, you killed it into this year, and you've done great, and you've turned the 17,000 into 300,000.
That's correct.
That's scale, that's repeatable scale, that's organic growth. And what did you do? When do you discover Tasty? 2016, 17? We didn't launch the platform in 2017, but tell me the story.
So what I was doing before was a lot of trend analysis, technical analysis,
Sure.
Everything you can think of. I was trying to figure out what was the best way to do this, and I wasn't being successful. Like, I would make a trade, and in an up market, for instance, I would buy a call, but I would be wrong. I would be right, but I would be wrong. I guess wrong in the sense that I wasn't making money, because I'd be right eventually, but by then the premium had worn away.
Timing is everything.
Exactly.
Yeah.
Timing is everything with that. So then I learned that you can do this neutrally. You can do this by selling options. I had no idea you could do that. And it's just a little bit at a time.
So light bulb went off. It's somewhere in that time frame when you're kind of figuring out, learning how to trade, and kind of figuring out, hey, what's this woman doing, and what's this, what is this whole part of the business?
Yes.
Some kind of light bulbs went off.
That's right. So by the time I came over here, I had the foundation of understanding what credit spreads were, what all the neutral strategies were. I read some of the big books like Options Volatility and Pricing. I have that on my bookshelf still. I understood implied volatility, but I just wasn't putting the pieces together of how to use that strategically and when to look at IV and use that for your timing instead of trying to figure out when something was going to happen to predict the future.
Listen, if everybody who read Larry McMillan's book or Shelley Natenberg's book could would be a successful trader, there'd be a lot more successful traders.
Right.
A lot of people have read those books, and the same thing. Have you had a chance to read Julia's book?
Yes.
Okay, great.
Yeah, I read Julia's book. It was great, and that book, it's written. I think she has an engineering background.
Physics.
Very technical background.
Yeah. Oh, she's very technical.
And I appreciate it so much because I'm reading it and it sounds just like a thesis. Like she's got figures and charts and graphs, and they're all mentioned correctly. It's great. I love it. And then, so that book, I approached that as trying to figure out how to create a core portfolio. So I really gravitated to that section. I read the whole thing, obviously, but I read that section several times to figure out how to get this all into one portfolio to basically trade it like a hedge fund would. How would the professionals do this?
I mean, listen, that's what Tasty's been all about since we kind of figured out a set of mechanics that we thought we could build a network around. Was essentially, let's think about this business very differently than anybody's ever thought about it before, and let's build, an entire trading foundation and methodology around that. And, I think we've done that in a really interesting way for the last, 12, 13 years. So I'm going to fast forward to 2020, and you kind of come to Tasty with, I'm just going now just on, recollection of just your story and stuff like that. But you come to Tasty with like a real small amount of money. You put your toe in the water with us.
Right.
Like maybe like 10 grand or something like that.
Yeah, that's right.
Okay. And you say, you go like, all right, let's give this a shot.
Yeah.
Okay. So take me through. Let's go 2020, because 2020 was kind of a year like, none of us are ever going to forget.
Does the world economy come to a complete stop?
We're seeing something that we've never seen before, and in the process of seeing that, people are scared.
Hell yeah,
and they should be,
rightfully so.
Yeah,
sure.
It's wild between volatility, between just the size. Lock limit down yesterday, lock limit up this morning. All this stuff is incredible, but it's going to normalize. It always does. 35 days we're crashing. The rest of the year we're kind of rallying. I mean, wild swings in volatility. We hit 80 in the VIX, and now you're you're in your first little. This is your kind of your first semester.
That's right.
So did you survive 2020?
I did. I survived. I'm still here. So just like you asked for, I'll tell you exactly what I did through that time.
Yeah.
So before 2020 happens, we had to talk about the grind up of 2019.
Okay.
After the flash crash of 18, right? It was just straight up from there.
Yeah.
And it was a lot of rolled positions that I had left over by the time early spring of 2020 arrived. So it was a lot of rolled naked calls, a lot of call spreads that I had learned how to roll, but not like I did through 2021, which we'll talk about later.
Right. But you're saying in 2020, what you had learned was to roll positions forward.
Yeah, I learned that. Actually, that did get me through 2020. So it was a segment that you did with Tony. You guys were talking about anatomy of a trade with Amazon, and just like I had known the whole time, you could roll up the untested position to collect more credit on like an iron condor, for instance. But I did not know that you could roll out the long wing and roll out in time.
Okay.
So I started doing that with these leftover positions, and through 2019, and then that really just it saved me, because I learned that you could just get a little bit more credit, roll things out. You're taking more risk, but at the time I was just willing to take that risk.
I mean, you're young. I mean, I'm serious. You are young. You're young. You're successful. You can take a little bit of risk. It wasn't like a crazy amount.
Yeah.
And that was going back to the whole Karen the super trader discussion. I mean, that was her approach on losing positions, which is, hey, push them out, roll them down and out.
Right.
Essentially down. If she short puts, roll them to lower strikes and roll them out in time until you can pick up a credit. And same thing on the call side, roll it, up and out.
Yeah, so the crash of 2020 helped me. It brought all those positions that were deeply in the money, it brought them out of the money and made them profitable. And so I was able to get out of all those trades that had been just a graveyard of rolled calls and call spreads. And so by the time March 2020 rolls around, I'm doing what I think is I'm doing well. I think I'm doing pretty good. And the bond market starts going crazy at that time. So it was around then that I started trying to short the 30-year bonds.
Oh, so you have a relatively small account and you're doing the ZBs?
Just one contract.
One contract of ZB options?
That's right. And just short the actual future.
Oh, short the future, okay.
But at that time I had already cashed out my 401k from a previous job. So this is about a $30,000 account now.
So you took your 401k and you rolled it into a regular margin account?
Yes.
Okay, because most people, when they cash out their 401k, they'll roll it into like an IRA or something like that.
No, yeah, I did regular margin.
Yeah, okay. I like that because that's a power move. Because at your age and where you are in life, that's the whole concept of really owning your own risk and owning your own future type thing. So I like that.
Yeah, they seem to hamstring you. I can't do what I want to do.
Yeah.
I figured I'd rather take the tax hit and just do what I want to do, and it obviously has helped.
Yeah. Okay, so you have a $30,000 account.
That's right.
We're getting to 2021.
This is still 2020. The bond market's going crazy.
Yeah.
I figured that the best way to play this bounce would be to short the bond market, because I figured while the stocks were going up like they did, the bond market had to cool down sometime.
Okay.
And it didn't. And I remember there was one day I woke up and the bonds were at 191. They printed at 191.
I remember the day.
And I just wish that I think it was like March 6th or something like that. It was a Friday. And I just remember wishing I had more money, because it was like there's times as a trader when this is just a gift that you've got to do something. And I know you know what I'm talking about.
Yeah, because that actually, not only that day was my birthday.
Oh.
And I remember that day, and I was short the bonds as well.
Yeah.
So yes, I remember it almost like it was yesterday.
Yes. So through 2020, the bond trade cooled down for me. It ended up being okay. But I knew, I didn't know, you don't know anything, but right. I just had a obvious hunch that this market cannot sustain the rally that it was on. So I took that position in bonds, and I took that money and rolled it into a short position and just a few micros, the mini NASDAQ, the micro NASDAQ futures, and the E-minis as well. Not the full contract, just the micros.
That's fine.
So I had a couple of those short, and a lot of, again, rolled calls and call spreads.
Yep.
That became in the money in 2022, just like what happened to me in 2020. So I took that
hold on. Before you get to 2022.
Sorry.
So you're at 10,000 or whatever it is you open an account with. You cash out of your 401k.
Right.
You get it up to whatever, 30,000-ish. Okay. So you have 30,000 in a margin account that you're playing with. You take that 30,000 up to what, about 60 or something?
Yes.
Okay, so you did good. So you basically doubled your money, and you're thinking, "Hey, I got this."
Right.
I'm kind of a genius. I mean, I'm just saying this is how our egos work.
Right.
Okay, I got this. If I can go from 30 to 60, I can go from 60 to 120 to 240,
Right.
to 480, the whole deal. And then in 2021, you got slapped, right?
That's right. Yes.
Okay.
It was another grind up year.
Okay.
Something that I still am searching to learn how to handle that situation.
Yeah.
Which we're not in this year, but eventually we'll be there again, and I want to know what to do then. But
So 2021 is a tough year, and your count drops all the way down. So you go from the 60 to 30, and then you go from 30 all the way down to 17,000.
that's right.
So you basically lost 50%, and then 50%.
That's right. So yeah, 2021 was an up year. It was the same thing. I had a lot of naked calls that were left over from rolling up the untested side of
Yeah, we made new highs
strangles.
in the market, basically.
I remember learning that it's more statistically better to trade both sides.
Yeah.
So if you're going to be short a put, you should be short the call as well and a strangle. However, I feel like you have to be aware of what the market's doing. Like, you have to have some kind of market awareness. Now I kind of know that in a crash like that, the rebound is pretty tough. And I probably won't be short.
Yeah, because you
like
missed
that.
it in 2008 because you were too young.
That's right.
And you didn't really get that 2009, 10 rally that,
Yes.
and then the next 15 years. But so you take your account, you did all this work now from 2019 all the way to the end of 2021, and you're below where you started from. Has to be a little bit discouraging, but on the other hand, you've learned something.
That's right.
Okay, so now 2022 is the reason you are here as a rising star.
Right.
So you start the year with 17,000. We make a high on January 3rd, first day of the year.
Right.
And for the rest of that year, you killed it into this year, and you've done great, and you've turned the 17,000 into 300,000.
That's correct.
Okay, now that's progress.
It's progress.
That's scale. That's repeatable scale. That's organic growth. And what did you do? Like, what clicked? What happened? Trade wise, it couldn't just be rolls. And what happened? Like, tell me. What kind of products did you trade? What kind of strategies did you use? When did you roll to keep your positions alive? Were you rolling for credits or debits? Like, all these things.
No problem. I was for a call spread, for instance, I would roll out in time, and I'd expand the wings. So I would.
So let's talk
collect the
about
credit.
call spreads. So you put on a call spread. Typically, how far out in time do you go when you put on a call spread?
Oh, 45 days.
Okay, so you stuck to the 45-day rule.
Yes.
How far out of the money do you what delta is your short call?
I go 25.
25. Okay.
Yeah.
And then what delta is your long call?
I make it long. I make it wide enough so I collect as much credit as I kind of want to. Like, for instance, right now on a SPX call spread, for instance, I would want to collect 1,000 and take about 4,000 in risk.
Got
so
it.
like a
Okay.
$50
So you're about
line.
an 80% probability of profit type
Right.
thing. Okay, got it. So you're right at that 20-25 delta.
Right.
If the market went up, were you rolling because the deltas changed, or were you waiting till you get to 21 days?
Waiting to get to 21 days.
Okay,
yeah.
so you were pretty consistent about that.
Yeah, and a lot of these were in products where you didn't have to worry about being assigned.
Like SPX.
Yeah, exactly. So SPX is great for that. I remember that segment with Bat. You seemed very perturbed that he was doing that, and he was obviously getting under your skin. But I understand why, because it is a low probability.
He's never gotten under my skin. It's all just show for the. It's just for the show.
Okay.
Yeah, he's never gotten under my skin.
Yeah, it is. It is obviously a low probability of success method, but it gave me some hope. So what I was searching for in that time was hope, and it gave it to me, and it was able to sustain me through just a straight up market. So then when 2022 happened, all those positions again became out of the money.
Yeah.
They became profitable. I was able to close them, but at the same time I was still short the micro futures.
Got it. And you had a big, 20% down move, which probably paid nicely.
Right. And then these subsequent rallies too, I was short. I was not long in those rallies. I wasn't positive delta, but I was significantly smaller in size.
Got it. But were you doing any naked options at all?
Not as much, no. When I had the $30,000 account, I was still trading naked. Tesla, for instance, like I remember I was very scared because the call strike was breached, and I didn't know if it was ever going to come down. It did. I got out, but it scared me more then than it does now. But now I love the futures. I love trading naked futures options too. But I don't know. Equities are just, securities. Sorry, are I don't know. I don't feel like there's enough credit sometimes.
You just like the additional buying power, but when you're over 175,000, you can go portfolio margin, and then equities essentially become the same as span margin.
Yeah.
So it doesn't, now you're at the point where you can create, it's just more opportunity because basically everything looks like span.
That's right.
But so talk to me about those rollouts. So
No problem.
Were you always rolling for credits?
Yes.
So you always roll. So even if you were, let's say you were short a spread that was not in the money, but that went against you and you couldn't roll the same strikes for a credit, what would you do? If it was a call spread, you would roll it out to the next month or 2 months out? Or would you roll it up in price? Like how did you get a credit all the time?
I would roll out in time, keep the same short strike, and I would roll the long strike up.
Oh, so you would widen the spreads.
Yeah, widen the
So
spreads.
you end up taking more risk.
Exactly, yeah.
Okay.
That's why you didn't like that.
That's right. That's exactly why I didn't like it.
Yeah.
Because I'm not somebody that, I don't like to add, you were betting that eventually you were going to be right. Which is a totally reasonable bet. But since I've taught myself not to believe in mean reversion to price,
Right.
It scares me when I have to add risk to an already losing trade.
Right.
So I prefer not to add risk and try to either roll out same strike, so I don't have to put up any more money. As long as you can roll for credit, I don't care if I have to move it out further, move it up higher, whatever it is,
Right.
or pay a small debit.
Right. So that's what got me to where I am today, and I had
Have you been able to keep the profits?
Yes, through this year, and then this latest up move has been not as detrimental as it could have been because I'm more diversified correlation-wise now.
Yeah.
For instance, I'm trading other products like natural gas, oil. I've been trading oil for the past 2 years, and it's been amazing. Trading both sides of that market. But yeah, it's not bad. I think I'm going to have a good year again.
That's great.
Not as good, but
You
I'm
can't
not
have
going to
a
be.
year where you make.
Right.
I don't even know how many. I don't even know what is that. That's 200. 300. I don't know, it's like 300 or 400%. I mean, your year was a crazy outlier last year, and you can hope to, it's going to, as you get more money, your returns will normalize.
Right.
But you can still, you can still have great years.
Right.
She's not going to make 400% or 500, or probably not.
And that's not expected. And I hope the United States Treasury isn't expecting another generous donation this year as they got.
So how do you go back to work as an engineer? Like how do you go back to your day job? Because you're trying to do all this.
Yeah.
This is a tough. I mean, because you're pretty active.
Right. It's actually not as hard as one might think. It's the market's only open a certain amount of time.
Right.
You don't have to do this staring at a screen all day.
How many trades do you think you make a day, a week, that kind of thing?
Not that many. Maybe 1 or 2 a day right now. I'm not as active as I was a few years ago.
Okay.
But I'm still doing well, though.
Yeah. But you're still participating every day, and you're watching the markets all the time.
Oh, absolutely, yeah. Yeah, it's working and doing this at the same time is very doable.
At this point, you believe it is repeatable.
Yes.
Yeah. I mean, so do I. Of course, we all do here. That's why we're here. But I'm just, sometimes when you first start, it's very difficult concept to grasp, things like that. But do you think that are you going to try new strategies at all?
I'm trying to right now figure out how to do this with the top dogs portfolio method.
Sure.
So the 16, the very first one, where you're long futures, short options against them. That I really like that portfolio, and I've dabbled in it this year and trading uncorrelated products like gold and oil, natural gas, equities.
Those have been in good ranges. Everything but natural gas. Everything else has been a pretty good range.
Right. Yeah. So that's what I'm learning to do now, or trying to figure out how to do as a core portfolio.
Thanks so much for making the trip up here to Chicago, and I hope you enjoy your stay in this amazing city. And I'm glad you could come to the office and share your story with us. I think everybody's going to love to hear it.
Yeah, thanks for having me, and thank you for listening, because it's lonely out there as a trader. You can't share your successes and share your miseries with anybody else.
I know. That's why you just got to move here.
Yeah.
Thanks, Matt.
Thank you.